Welcome to Equity and Ag, your market update. Tuesday turned into a massive day across the markets, with stocks ripping higher on growing optimism that there could be a way to wind down the Iran conflict. The S&P 500 jumped 2.9%, the Dow Jones gained 2.5%, and the Nasdaq led the charge, climbing 3.8%. Now, while geopolitics is still front and center, there's also a heavy dose of economic data hitting the market. We're in the middle of labor market week, with ADP private payroll numbers on deck, along with activity data from ISM and S&P Global. On top of that, retail sales will give us a better read on how strong the consumer really is right now. A big driver behind Tuesday's rally came from comments out of Iran. President Masoud Pezeshkian indicated the country is willing to move toward ending the war, which sparked optimism that negotiations could be on the table. That said, the details still matter here, and markets will be watching closely to see what kind of conditions or guarantees Iran is looking for. On the U.S. side, President Trump suggested he could be open to stepping away from the conflict without taking control of the Strait of Hormuz. But markets don't seem fully convinced just yet. Oil reacted to the headlines, pulling back a few percent on the day. Even with that drop, both Brent crude and West Texas Intermediate are still holding above $100 per barrel, keeping energy markets elevated. Looking at the labor market, the latest job openings and labor turnover survey showed hiring slowing down significantly, near levels we haven't seen since the early days of the pandemic, when unemployment was much higher. There are still just under 7 million job openings, which was in line with expectations. But what stands out is this low hire, low fire environment. Layoffs are down, and workers aren't quitting, which shows people are holding on to their jobs right now. When it comes to the Federal Reserve, things have shifted pretty quickly. Earlier this year, the expectation was for rate cuts as the economy looked stable and inflation was cooling. Now, with inflation staying stubborn and added pressure from geopolitical tensions and energy prices, the outlook has changed. Instead of rate cuts, markets are now preparing for the possibility of a longer pause, or even the chance of another rate hike. Disclaimer: this content is for informational and entertainment purposes only and should not be considered financial advice. Trading and investing involve risk, including the potential loss of principal. Always do your own research and consult with a licensed financial professional before making any investment decisions.